Time for the weekly Tesla update here, and just want to show you the Fibonacci from the high back here of 2021 and the low back here in 2023, and we can see the range that it's still in. It's in a new trading range, like I mentioned in my last video. Essentially, this was the trading range before the 236 to the 382 right here, right? Once it lost here, it was here. It even dropped down to the 136, and that was a trading range for a while. But now I believe we are officially in this new trading range where the 382 is support to at 221, and this is the 50% retracement level, and that is going to be resistance. And it did not make it there this week, so possibly there's a chance to wick above there next week. And if there is a candle close above it, then that'll be a very bullish indicator. But what I'm really looking for is a weekly candle close above this 265.13 right here. Because when you zoom out, you can see that the market structure is still making lower highs. From the top, lower high, lower high, lower high, lower high, lower high, lower high. This is still a lower high from here, right? But the good news is, if you believe in trend lines, we can see that the trend line is broken. No matter how you draw it, if you want to draw it here or down here, wherever you want to draw the trend line, it is now officially broken. It has not closed a weekly candle above that trend line ever. So this is a very good sign that this is going to be real and this is going to hold, which makes me really excited because this 220 level, maybe even the 230s, simply because when you add on the moving average here, this 200-week moving average at 231.17, that purple one right there, could be the new support, right? So no matter what price does, even if it comes down to the 230s or 220s, I think that's a really good buy zone. And I'm going to show you more confluence on other charts as well, why it's a good buy zone, because a lot of things are matching up in this area now. But will we get back there? Nobody knows. We're going to see what next week brings, right? But I believe next week this 50% fib should be some resistance, mainly because of the confluence of this previous higher or lower high right there at 265. So could next week get up to 265? Yes, it could. But what I'm really interested in is a weekly close above that 265.13. Because if it's only a wick and closes back below the 50%, then that could mean it's not ready yet, and then that could mean it could retest the 230 to the 221 zone. And also, when you look to the left of the chart, around that 258, we can see that it is a range where it has been a support and a resistance before, right? There was a support here, there was a resistance here, there was some resistance here, right? So we can see that this is a very, very important level, and we can see hopefully if it can close above next week. If not, it could retest the lower levels, but that should be about the maximum pain that I see. And I'm going to just put on the Ichimoku here for you guys, just so more confluence. And you can see on the weekly chart, it's even above the cloud. It closed the week above the cloud, which kind of makes the Ichimoku almost 100% bullish now. Except this part of the cloud, the future cloud, is not green yet, so that's the thing we're waiting for. It's a little bit lagging, but it's above every indicator basically. Above the conversion line, the baseline, the 50, the 100, the 200 week, the cloud, and it's a really good looking chart. 1 week changed a lot. It did the least likely thing. Usually it gets stopped at some resistance, right? But this is the least likely scenario of just breaking above every resistance in 1 weekly candle. So that's really, really, really bullish for future price, right? So we'll see what happens with next week. But this zone, right, here's more confluence of this zone, the top of the cloud right here, 225, right? More confluence of this zone should be support, right? We got the 382, we got the top of the cloud, we got the 200 week, and we'll go to the linear scale GAN right now, and I'll show you more confluence. And this is the linear scale GAN, and the more confluence that we have here is this blue angle, right? When we look across, we can see how important that blue angle was. And where do we see price at that blue angle right now for next week? Well, it sits around 227, so that's more confluence that this range will be support. Even a wick down to that orange angle or orange arc again would be like 221, 222, right? So this is more confirmation that that zone, if price ever got back down to 220 to 230, you should buy, right? Because this is looking like this bullish engulfing candle. Flip this to support. And I'm going to show you some stuff right here. Every time you see a bullish engulfing candle, it usually continues higher. So let's start back here. So we start back with this one right here, bullish engulfing above a level, right? It started below that red level, closed above, and it was a continuation higher. Then we had another bullish engulfing right to this angle, then it continued higher. Then we had another bullish engulfing right to this angle, and then another bullish engulfing that started below that angle, and it continued higher. Then here, a bullish engulfing above the arc and the 45-degree angle, and it continued higher the next week, which was the ultimate top, right? So this is a good sign, right? Bullish engulfing continues higher. So we could see a continuation higher up to this 290 zone where the arc is, right? The 290 zone. And we can see the top arc, how important that arc is. So could we come down earlier on the week to retest some levels? Yeah, that's possible. But later on the week, it could continue higher and then close above this 265.13. And if that happens, then the market structure is now officially bullish. If it closes a weekly candle above that, then there's a possibility to shoot up to the orange arc, which is around the 290 level, right? 288, 287 or so, 290. And what else is around 290? Well, let's go back to that log scale chart that I showed you in the past. And this is the log scale chart I showed you before. And what's that 290 up here? Well, what do you know? It's exactly that blue level. And you can see in the past how important that blue level is right there, right? We can see that there's a wick there. There was a consolidation around it. There was a wick here. There was some resistance here. And back here, it was a very strong resistance as well. So this is the stepping stones to a higher and higher Tesla, right? We know where support is now. It's in that 220 to 230 zone right here. And even if you go to the left, so we'll just draw a line in that 230 zone, right? Let's do that. Just 230 right here. When you draw a line straight across, you can see a lot of candles touching that 230 zone, right? We can see a lot. So it's a very good demand zone, especially right here. This 230 down to the 220 zone. Look at that. Perfect demand zone. So this is going to be the new buy zone. And like I said, once a weekly candle closes above that 265.13, it's going up to 290 or even 300 or whatnot, right? There's really nothing stopping it. But basically, market structure has to flip bullish, right? It has not yet. It has not yet because of this series of lower highs, lower high, lower high. We need this higher high. The first higher high is going to be confirmation that this thing will be on a moon mission and it will be ready to go higher and higher. And once we break this 290 and flip it to support, it'll go back to the all-time highs. And what's the ultimate target on this new scale? Again, well, the new ultimate target is $5,000 for this Tesla. And we can see that it's maybe possible by the year 2032.